So the Bitcoin halving is coming. The question is, are we heading to $250,000? Let's roll that intro and get right down into it. Okay, so with the Bitcoin halving event only a few months away, this has led to wild speculation around the price expectations for BTC. Many influencers and retail investors believe that we are likely to see upwards towards the kind of $250,000 Bitcoin. Now, before we kind of speak a little bit around kind of price predictions and expectations, I think we should spend a little bit of time today talking about the Bitcoin halving event and what it actually means, specifically for Bitcoin, but also for the wider crypto space. So the Bitcoin halving event, it kind of says exactly what it's going to do. It's going to halve the amount of Bitcoin that is able to be mined by a single transaction. So as we kind of confirm transactions on the blockchain, there are fees associated with every transaction. Those transaction fees are basically rewarded to Bitcoin miners, the miners who are basically proving that the transaction is correct, is legitimate, and should be added to the blockchain. Now, Bitcoin mining operations are quite extensive. They require a significant amount of energy, and this is a topic that has been widely spoken about quite a bit across, various different influencers, YouTube channels, TikTok channels, Twitter, and so forth, right? How green is the blockchain technology? Now, we know that proof of work as the consensus mechanism for Bitcoin requires quite an amount of energy. It requires quite an extensive amount of energy, in fact, to be able to confirm those transactions on the blockchain. Now, we can argue as to whether or not clean energy is being utilized or whether it is going to be coal-produced electricity that is utilized for the blockchain purposes of confirming transactions. That's important, but it's not really going to be the point and subject matter of today's video. Today's video, we're focusing in on the actual halving event, meaning that the rewards for confirming transactions on the chain will be halved. Now, the energy that is used for BTC mining operations is getting more and more expensive as time moves on by. This is then compounded, or at least the issue of rising costs are compounded when we start to address the amount of rewards that people are earning through those mining operations. When those rewards are halved, it means that you are earning even less money for your services as to confirm transactions on the blockchain. With rising costs and lower rewards or lower revenue being generated, we have to kind of consider what that might mean for the blockchain in the future of BTC. Now, the Bitcoin halving event, as I said, will halve the amount of rewards that those miners will earn, essentially meaning that Bitcoin's price is either going to move upwards because of the supply-demand element, which we'll talk about that in a moment, or becomes quite stagnant over time as less and less mining operations find themselves being profitable. Now, this is where the argument starts to get complicated, because there are people out there that will tell you that Bitcoin's price has no choice but to go up in order for mining operations to be profitable. And they're not wrong. They absolutely must if we want to see profitability. However, of course, if the Bitcoin price does not rise to these significantly high levels, then the Bitcoin operations or the mining operations will not be profitable. And we have to ask ourselves what business is going to operate if they are not turning a profit. And thus we have a bit of a problem for the future of BTC. Again, that is a future problem that's probably 1, 2, or even 3 decades off, but something that we should be thinking about in terms of sustainability and whether or not Bitcoin in itself will have to pivot in the future. Now, the Bitcoin halving event really does have an issue, specifically with how it is perceived by many retail investors. Now, as I said, we are halving the rewards that miners are going to be generating. Now, that's obviously really important for the mining operations, but it's also really important to understand what that means for Bitcoin in itself, if you're not a miner, but just, a Bitcoin enthusiast. The Bitcoin being halved, or the rewards being halved, essentially means we're going down from around 900 to 1,000 Bitcoin issued every day to about 400 to 500 Bitcoin being mined every day. This is actually a really important number because we do understand that there are 19.6 million BTC in circulating supply at the point of recording this video, out of the total 21 million that can ever exist. So when we say that there's new Bitcoin being issued, this new issuance is from the mining operations, and those that new Bitcoin that is being mined is going to be halved as of April 2024. So now we know that there's 19.6 million BTC out in circulating supply, and the remaining 1.4 million is yet to be mined, and if that is what is essentially being halved over time, we know that halving the rewards for the mining operations is going to have really low or insignificant impact on the supply and demand elements of BTC's price action. Now, hopefully you've kind of kept up to speed so far. It is quite complicated talking about Bitcoin halving operations, the mining operations, and what that might mean for you, the retail investor that's investing in BTC. Now we kind of get to the next part of the video, which is talking about supply and demand. The supply and the demand for Bitcoin is ultimately what drives the price. If you have high supply, low demand, then the price will inevitably go down. And of course, if you have low supply and high demand, well, the price action goes to the upside. And that is why the Bitcoin halving has been such a talking point in Bitcoin's history. Essentially, we halve the supply of new Bitcoin being mined or new Bitcoin coming into circulation, and that has inevitably meant the supply drops, or in theory, the supply stops growing, and demand comes in, price goes up. So a lot of people look at Bitcoin's Bitcoin halving event, or BTC halving event, as that next big catalyst for big bullish movements in the market. However, this only really works if you consider Bitcoin back in 2012 or 2016. Those Bitcoin halving events had significant impacts on the new issuance of BTC. But here we are in 2024, knowing that we have 19.6 million BTC in circulating supply. The halving event has less impact over time. This is something that we also see in the price chart, where we see diminishing gains over time as well. I spoke a lot about this in a video I have recorded earlier in this week, where we're talking about the elasticity of BTC, something that you might want to check out on the channel. So knowing that we have a reasonably high supply at the moment and demand that has yet to really come on in, we are expecting bullish times after the halving event has occurred, meaning there's going to be less supply being mined or issued, and it is going to be a bit of a talking point that might bring more people into BTC. Not as much mined as the Bitcoin ETFs. The Bitcoin spot ETFs have created such a huge buzz for Bitcoin that I think in itself have more of an impact than the Bitcoin halving. That being said though, my expectations are that we are likely to see a pretty decent run in late 2024 for Bitcoin and the crypto market. So let's talk price predictions. Now, we obviously did open up this video talking about Bitcoin's price action going up to $250,000, 250K. Now, that number, I don't really understand where it's come from. Potentially finger in the air or just plucked out of the air. That number in itself just seems like a nice round number that maybe resonates really well. There doesn't seem to be a lot of logical reasons as to why price would go to $250,000 and just stop there. Why not 500,000? Why not 1 million or 2 million, right? Ultimately, I think a lot of these numbers that are being called out are just to try to create some hype, some buzz, and some FOMO for BTC. Ultimately, if we take a look at the charts, and I have done this quite extensively, that I would expect us to see more of around $100,000 to $120,000 Bitcoin. Not quite as high as your $250,000 that you might be finding across the various different social media networks. Now, why $110,000 to $120,000? Seems to be maybe I'm just plucking numbers out of the air. Well, maybe I am, maybe I'm not. Ultimately, here we can see as price has historically gone into price discovery or into new all-time highs, how does anyone know where it is likely to stop? Well, there's a lot of psychology that feeds into that. Obviously, we do know nice round numbers does tend to create a bit of resistance. And of course, we also know that the Fibonacci sequencing numbers seems to resonate incredibly well with investors as well. So do watch out for those 618s and 786s, and maybe even the occasional 702. And if you know, you know. Now, ultimately, 110 to 120k is a nice number because if you connect the dots from all the previous bull market highs, the next high that would touch a curved line across there would be approximately $110,000. Now, that is not an exact science by any stretch of the imagination, but it gives you a bit of a ballpark figure to be aiming towards, which puts us at some decent gains, but not life-changing if you're investing in Bitcoin at the moment. From the lows that we saw back in November of 2022, we'll be talking just short of 700%, which is a diminishing gain on what we saw back in 2021, where it was just over 2,000%, and the time before that, 20,000, and the bull market before that, 58,000%. So we do see diminishing gains over time, and $110,000 to $120,000 seems to be the most probable after a Bitcoin halving event. So maybe not quite that $250,000. Now, let's talk about potential breakout scenarios. What could take Bitcoin's price out of orbit and up towards the moon? Well, for that, I think we have to look at the Bitcoin spot ETFs. Now, I've spoken about this a number of times. The Bitcoin spot ETFs are not as simple as people buying Bitcoin directly. Instead, the Bitcoin spot ETFs are essentially allowing investors to buy shares in the Bitcoin that's already held by the ETF. That means that the billions of dollars that we've seen flow in so far has barely touched the crypto market. Hence, why I've been telling everyone we're going to see a sell the news event. Now, with the Bitcoin spot ETFs, it is a bit of a slow process. They will accumulate BTC at spot, and they will hold those assets in Coinbase custody. That's going to take some time because they will only need to buy new Bitcoin when they look to basically serve new demand coming in for additional shares in the ETF. That is likely to see something that we see at a pretty big and astonishingly large level over time. So later in 2024, I think we are likely to see massive outflows for Bitcoin from the exchanges going straight into Coinbase custody. This in itself is going to shrink that supply and potentially bump up that demand, fueling Bitcoin's price potentially higher than I would normally expect, a breaking out of that $110,000 to $120,000. But again, this is speculation. We're in uncharted territory. We don't know exactly what is likely to unfold here for Bitcoin, but we do know it's going to be one hell of a ride. Why don't you check out this video right here where we're talking about a potential altcoin gem that you might want to invest in. But of course, make sure you do your own research because I am no financial advisor.